Welcome to your look at the markets this morning. Now today is Wednesday, the 28th of March, 2018. And we got a lot going on in the markets today. There's a few things that I didn't really expect to happen. And we're going to get right into it. Start the charts right here. Now, one of the things I didn't really expect, I'll move my picture out of the way over here, and we'll take a look at bonds and rates. This is something right here. Look at this. Bond yields are falling here. The U.S. 10-year is down to 2.75%. This is quite a move, you know. I said that it would be in a range between 2.7 and probably about 3%. In around that range, right? So now it's down to 2.75, so it's in the lower part of the range that I predicted. It hasn't went below the 2.7, which was the bottom end of the range that I predicted, but I'm surprised that it's moved down this much toward the bottom end of the range that I predicted, with everything that the Fed's doing. I almost think that this could be manipulation right here of the market. I really. Just like in the silver and gold market, because this is why it would drop down that low. The yield is beyond me. So now let's move on to the Dow Jones this morning, see what she's doing to the stock market, and it's up 12 points today so far. I'm kind of expecting today to be in the green, but just slightly, maybe up 100 points or something, you know, kind of day. But you can see what's happening with the market. If we look at it right here, you see what's happening? You see what's happening? We had this big drop in the market right here. And then this was a big pooey, right? And then it went up, not as high, so it's a little bit of a lesser pooey. And then we had this, again, this drop, and it is a little bit lesser pooey. And then this one here, this rise, a little bit lesser pooey. And we see this one coming down like this, and a big pooey, and then lesser and lesser and lesser. And they're getting smaller and smaller and smaller, these consecutive ups and downs. It's finding an area. It's consolidating. That's what it's doing. It's consolidating in a range somewhere around, looks like to be around 24,000. It's consolidating in around that range of 24,000, the market. And so if we continue to see that consolidation in around 24,000, it's starting to run into a holding pattern. The event that knocked the market down was this big event right here. Had everything to do with the Fed and bond rates. Now what we can see is this consolidation right here, 25,000. It's consolidating between 24 and 25,000 more or less. More toward 24,000. But if those bond rates continue to drop like they're doing now, it might consolidate more up toward 25,000. So that's what we're seeing right now is consolidation. Now here's the thing. At the very end of this month, we're going to have to see if this was a little bit of an anomaly, the fact that these bond rates are actually falling. It might be a little bit of an anomaly because the Fed is going to, at the very end of this month, raise it to $30 billion a month of bond sales. And that's only like 3 days away. And so that's the next event that's going to happen right now, you know. And that should start to raise yields on the 10-year. In which case, that'll start to take off some of this steam off of the market again. So now let's take a look at the oil prices. The sweet light crude prices for the last 5 days. This chart was up? What's the heck's going on here? Let's take a look at 1 month. Yeah, you see 1 month, but you see a little bit of a decline right here. It's at 64.85 today. 64.63 as we speak. Down 62 cents or 0.95% on the day. We might have seen a short-term peak in the price of oil for Sweet Light crude, but I can't see it going over $70 because, like I say, the production will increase from places like West Texas. Well, there's several different oil basins in the United States. West Texas produces the most, I think something like 3 million gallons a day, something like that. They produce, and the other ones produce 1 point something million. There's a couple others. Anyway, so let's take a look now at Bitcoin. Bitstamp. It's just struggling to hang on to $8,000. Really, it is. It's struggling to hang on to that price. I'm kind of expecting to see it break down into the 7,000s. Possibly today or tomorrow. But listen, Bitcoin, you know, it's going to make probably a triple bottom. And it's not going to make a triple bottom at these prices of $8,000. I can tell you that right now. But it's going to probably make a triple bottom. And then we're in for the next big increase in the price of cryptocurrencies. Now, Bitcoin is like the center pole of the tent. Bitcoin goes up, all the other ones go up too. I think you're going to start to see them move in more independently on this next rise of cryptocurrency that's coming. It is coming probably in a year or 2 years, but it's coming. It's down the road in the future. There's going to be a massive price increase in cryptocurrencies, and they're going to become massively more eventually, they're going to become more than just a speculative investment. Right now, they're mostly a speculative investment. But they're going to become more than that in time. And as we move toward that adoption, see, we're still in the early phases of this. We're in for, I think that we're in for it to make a triple bottom, and then later it's going to start to slowly come back again, slowly heat back up again. I think that $20,000 peak was the peak, just like 1,100 was the peak earlier. And the peak earlier than that was 260. And the peak earlier than that, I think, was 60. And then the peak earlier than that, see, and I can keep going back and back and back. It's been through, as I've watched it do this probably 8 or 9 times, and it's not going to stop. It's going to continue to do this. This is a pattern it does. The next big up is going to take Bitcoin up, probably, well, I shouldn't say Bitcoin, cryptocurrencies in general. It's going to take them up much, much higher than they are now. But you got to invest in the right ones. You just can't willy-nilly go out there and invest in coin number 327, thinking that that's like betting on a horse. You're apt to lose your money. You got to get into the top, the best coins. Those are the coins you got to get into. And I think that Bitcoin itself is going to lose some of its edge of being the dominance of the market. Now, if we take a look at cryptocurrency market capitalizations right here, we can see the dominance today is 44.9%. I'm expecting in the next year or two that dominance to move down to 30% or even less, 20% even. And that means that these other coins are going to take more of the market share. Coins like Litecoin. I am a real Litecoin enthusiast. I like Litecoin. Litecoin's one of my favorites. I like Ethereum. Don't get me wrong. Not as much as Litecoin. I like Litecoin better, but I like Ethereum. I like Bitcoin Cash, but not as much as I like Litecoin. I like EOS. I like Stellar, Cardano. I like Neo. I really like Neo. I like Neo a lot. I like IOTA, and I like Monero, and I like Dash. You know, I don't know so much about Tron. But anyway, those are coins that I like. I like Ethereum Classic, too. I like the top coins. I don't like to go down the list way down here and try to pick a coin like number, let's go to the next 100. Trying to pick a coin like, say you go all the way down here, like coin number 195, or Mias coin, or something like that, you know, or some of these I recognize from the past. In fact, I probably still have some in wallets stuffed away someplace. Feathercoin and Purecoin. I know I have Feathercoin and Purecoin stuck away someplace. I know that for sure. But where would I have them? Probably on some old hard drive someplace that I don't even know where it's at. Probably got, I don't know. I got coins stuffed away in old hard drives here and there, you know. But you don't want to pick coin number like 131, wax, and invest all of your money. Sell your house and invest it all in wax. You know, coin number 131. You don't want to do that because you're just gonna find that wax might end up not becoming nothing 5 years from now, not even heard of anymore, and then you've lost all your money. No, you're better off getting into something that's going to be around, you know. Okay, so now I explained to you how bonds and rates yields today. We've taken a look at that. We're going to take a look at the silver price. Oh, this is sick. This is sickening. Sickening, sickening, sickening. You know, down 18 cents today, 16.32. Well, guess what, guys? Buying opportunity, buying opportunity. Get into your silver dealer today and buy yourself a 10 ounces of silver. You know, well, okay, this is not financial advice, but I'm just speaking for myself. Get into your silver dealer today and buy yourself a few ounces, even if it's only 2 ounces. Go in and buy a couple ounces. Well, the price is cheap, $16.32. You know, silver is the buy of a lifetime. Now, the price, how much downside risk does it have? Because it's costing them about $14 all-in cost to get it into that coin that you're buying. And you're buying it for $16.32, and so maybe there's $1 or $2 premium. So you're probably only $4 above what their cost is. You know, their cost is 14, and your cost is what, about 18 maybe. And you're only about $4 above what their cost is to get it to you. The world is not going to have silver forever in the ground. Silver is a valuable, scarce commodity, and they're going to run the heck out. They just can't keep digging it out. The mines are getting, every year, the mines are getting a little bit less silver per ton of the ore grade that they're hauling out, you know, because the mines, they always want to make the money first, the best money first. Everybody's that way. If somebody eats a sandwich, you know, they go for lunch, they eat a sandwich. They eat all the tuna fish out of the sandwich first, and then they leave all the crust, you know, and they do the same thing with the mine. They go in there and they pull out the best ore out of the ground first. They want to make the most money as fast as they can. Later, what's left? And this is where we've been going with silver. All the mines on Earth, they found all of the good silver resources, and they've been digging out all the best stuff first. And now what's going to happen in the end is it's going to fall off sharply. Right? And right now it costs $14 to get that coin, all in production costs, to get that coin to the dealer to sell it to you, and you buy it for 18. I mean, there's not that much room for it to go down. Right? Okay, so now let's look at the U.S. dollar index. U.S. dollar index is up today. She's heading back up toward 90. And this is the reason why right here, if you take a look at the inverse, this is exactly up the same amount that gold and silver's down. There's an inverse relationship between gold and silver and the dollar, and there's also an inverse relationship between the dollar and oil. You know? And so this is what we got going on. You notice the oil price dropped back a little bit today? Well, you notice the dollar's up a little bit today. Of course, now the Chinese are going to break this inverse relationship between the dollar and oil, because now they're not selling the dollar completely. This is the first time ever, since you guys been alive, this is the first time ever right now when the dollar is, oil is not exclusively sold in the dollar. Every time some other countries tried to do it, they've pulled the aircraft carriers in and they bombed the heck out of them. But this time, they can't bomb the heck out of China. And so it's basically China's doing what they want to do. China has become, I think China now is the big cheese. It's not the USA anymore, because this is just the way things are going. It's a big economy that's fueling the world right now. The new Belt and Road Initiative is the only thing holding the world up right now. Is Chinese investment. Anyway, This has been your market report for today, and thank you guys for tuning in, and we'll keep you in touch with all the latest news on what's going on in the markets. We're right on top of it, boys. Bye-bye for now.